updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. First trading day of the second half. We got ourselves a rally underway. Despite earlier losses, a rebound for the Dow, the S&P, NASDAQ all solidly in the green. Let's head right over to the First Word breaking news desk for today's afternoon call. Here's Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks with a bid right now, with the Dow currently up 265 points. S&P's gained 30, while NASDAQ is higher by 64. The U.S. 10 yield at 2.88%. Gold is little change. Oil is climbing, and Bitcoin is higher by 3.6%. Among the main 11 S&P sectors, only telecom was in the red, and leaders to the upside in the Dow, McDonald's, Coca-Cola, and Boeing, while Intel fell 3% and led to the downside. After earnings, Micron fell 3.1%, and in deal news, Kohl's plunged 18% after sales talks ended. In other news, GMC's profit down due to supply chain problems. And wrapping things up, Chicago wheat futures fell back to pre-Ukrainian war levels. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. We've been talking about crypto today, quoting Bitcoin having a little bit better day today. Bitcoin up 3.3%, 19,350. But every time somebody gives me a support level, well, it's 30,000 or 24,000 or 20,000, it just blows through it. I want to know how we should be framing up this whole crypto space. Kavita Gupta, founder, Delta Blockchain Fund, joins us on Zoom from New York City. So can you just tell us maybe how we should step back and think about the crypto space in general and how it trades and how we should think about it as an asset class?
Sure. Paul and Bill, first of all, thank you so much for having me on. It is like any other stock market, which has really good days and volatile down days. And I think the conversation around crypto, especially around Bitcoin and ETH, has always been about the price point. So we talk about, okay, the last low time, the all-time high, and now where it is. You just mentioned about 3.5% up comparatively, going from 19,100 something to like 350. If you look at the crypto market overall, from 64,000, that doesn't really add up. What is the reference point? The way I look at it Bitcoin with respect to prices, and I look at everything else with respect to technology. And with respect to Bitcoin prices, I always feel that it's a long-term bet. This is just, again, my personal belief, no financial advice, but I have always looked at Bitcoin personally as a long-term hold. And the more and more adoption it has, it is definitely a great return asset class, which I love to personally invest. When it comes to ETH and other places, I always say with the market volatility, with Bitcoin going down, with crypto going down, with so many problems happening in the space, with the crashes, liquidation, the market is down. But from Delta, we look at it a great place to invest in technology.
Kavita, when I think of all the turmoil that we've seen in the crypto market this year, so much of it is centered around these sort of shadow banking operations that exist in crypto. First it was Terraform Labs, their Anchor protocol, then Celsius Networks. Now we're looking at Voyager Digital. We just had the news come out just a few minutes ago. Voyager Digital is pausing trading, withdrawals, deposits, and loyalty rewards as of 2 p.m. And for people who aren't familiar, these are basically either companies or protocols that pay very high interest rates or did pay very high interest rates in exchange for locking up deposits of your cryptocurrencies. I'm wondering where you see that whole space going. I mean, it's starting to look as of now that these really enticing high interest rates, as high as 20%, for example, in Anchor, were just unsustainable. And what does the future of that whole space of crypto borrowing and lending look like after the dust settles from all this?
Yeah, it's a very, very good question. So first of all, I want to separate it between centralized lending and decentralized lending. So you have centralized lending platform like Voyager and BlockFi and others you mentioned, and then you have decentralized lending platforms like Anchor, which lets you use Stablecoins like Luna, which was programmatic stablecoin, not really pegged. Terra, sorry, which was not really pegged to anything apart from Luna, which is not really a collateral to have a high yield. So if we focus, that whole scheme actually already went out with the market turmoil, not having really good faith or trust in Luna and then Terra and then that depegging. On the centralized side, which you talked about, Voyager and BlockFi, I think it's a cascading effect and combined with the market volatility. I do think there were, at least for BlockFi, I can say a really strong compliance mechanism. But when you have trillion, like multi-billion dollar funds like 3AC and Celsius completely getting illiquidated because they represented a lot of things to various different lenders incorrectly and also had low compliance but had a really good reputation in the market, that gets basically cascading effect on the centralized lending places. And when even at the right time with the LTVs, they decided, okay, these guys are not adding new collateral, we have to liquidate them. The market is already so down that if people have suffered losses, and then you have the panic where people started withdrawing money. So you have withdrawals, you have low prices, and then you have volatility and illiquidation. So
Paul, it's like Lehman Brothers on the blockchain, basically.
Okay, thank you. That helped.
If you need to simplify it, right, Kavita, is that the best way to think of this?
It is a post MBS 2008 crash, honestly, what we are looking at in the crypto market DeFi space.
Absolutely. And so, what does it look like on the other side, do you think? Is there a sustainable model to actually outperform traditional finance with interest rates in crypto, do you think?
I think there's always, right? And if you have a collateral, you have a lending model. I think the timing, like what happened with MBS, you still have mortgage-backed securities, you still have ABS, you still have inflation bonds and derivative products. It's just that now you have much more strict rules around what is your liquidity, what is your LTVs, what's your compliance and risk model. And I think we're just going to come up with much more cleaner rounds and transparency on the risk metrics. And I think definitely it will be a much stronger economy for the crypto community out of this. We are looking at the bailouts of different ways. Instead of government bailing out, we have different big organizations bailing out these lending platforms. And I think with SEC and CFTC working very closely with them, we actually going to see a much more robust model.
All right, Kavita Gupta, thank you so much for joining us. Really appreciate you giving us your thoughts on all things crypto. Kavita Gupta, founder, Delta Blockchain Fund, on Zoom from New York City. We will have more coming up. You're listening to Bloomberg Business Week on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right. A labor contract for 22,000 U.S. West Coast dock workers. That's on the verge of expiring, opening the door for maybe strikes, lockouts, or work stoppages. Boy, there's always something, in these ports, whether it's the supply chain issues we've been talking about for a couple of years, and now we've got labor, which is a more traditional problem. But let's bring in our next guest, Mario Cordero, Executive Director for the Port of Long Beach. All right, let's go to Charlie Pella first. Let's get a business flash. That's even better.
Very quickly, we'll get right to our conversation on ports in just a moment here. Brief check of what's happening in markets. The Dow, the S&P, NASDAQ, they're all sailing higher right now. S&P up 34, higher by about 0.9%. The Dow up almost 300 right now. Best level of the day. At the worst level, we had the Dow down 287, so a big swing today, up 1%. NASDAQ up now by 0.7, 10-year yield at 2.88%. Gold at 18.08 the ounce. West Texas Intermediate crude up 2.5%, 108.42 a barrel. I'm Charlie Pellet. That, Paul Sweeney, is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. All right, today, as I was saying, at 5 p.m. Pacific time, the contract for thousands of West Coast port workers expires. What's going to happen then? Mario Cordero, Executive Director of the Port of Los Angeles, joins us on the Zoom thing from Long Beach, California. Mario, thank you so much for joining us. We've been talking to the folks on the West Coast at the ports really for the last couple of years, talking about supply chains, when's it going to get better, all those types of things, and we'll get to that. But you've got a more immediate concern here, and that is the workers, your 22,000 West Coast dock workers. Can you give us an update of kind of where we are on that?
Sure, and thank you, Paul and Mike, for having me. Number one, I can assure everyone that the cargo is going to keep moving. In my opinion, you're not going to have a resolution here, or you didn't by July 1st, so to speak. But I think the good news, in my view, I'm very optimistic that you will have a resolution within a reasonable period of time. So I no way see any repetition of what happened in 2014. So I think, again, I'm very optimistic that the parties will move towards a mutual resolution within a reasonable time. But in that regard, the cargo is going to keep moving around the clock.
Mary, I'm curious what some of the demands are. And the reason I ask is I feel like, with the labor market as tight as it is, with inflation as high as it is, that labor demands from unionized workforces are going to become a bigger and bigger story for the rest of this year. And the issue you're dealing with might be something that a lot of companies and government agencies even will have to deal with. What is it? A cost of living thing? Is it these guys feeling like they're overworked? What's the sort of motivation for this potential work outage?
Well, number one, this is a union contract that they negotiate every 6 years. So I think it's part of the course in terms of what you have here in terms of the collective bargaining periods. But to your point, obviously from a national perspective, we've seen on the average a 5.5 increase in wages here. So I think I'm not privy to the discussions in the closed room, so to speak. I would speculate that, again, that's one factor. And I'm sure there's other factors that, again, the parties are going to visit. But whatever those issues are, again, I think that you'll have a reasonable settlement here. I think with within a period of time that I think people don't expect. And by that I mean it's going to be more optimistic in terms of a time period than I think what some media or journalists have written about.
Mario, we've been talking to the folks like you and around the country, dock workers, and just folks, kind of the ports and all that type of thing. And we know how hard these dock workers have been working, the truckers, everybody, in terms of trying to untangle the supply chain issues. So that we've been asking a lot of these people. Is that part of kind of what they're saying? They're like, hey, we kept this nation going while everybody else was working from home. Now it's payback time, maybe?
Well, I think that's a factor. I mean, this has been identified as an essential workforce, and I think that what you're seeing in essential workforces this seems to be a pattern, whether it's in the health industry, in terms of what we've seen in terms of the nurse associations and public safety and so forth. So I think, again, as a nation, we are certainly very pleased and make sure that we support the essential workers that strive towards making our economy better, which is where we're at now in terms of given where we were back in 2020. So again, I think all the factors that you've seen that have probably been in other collective bargaining scenarios, I think same factors may be applicable here. But at the end of the day, again, it's a multi-billion-dollar economy here at the ports. And so I think, again, I'm very, very optimistic that we'll have a resolution and we'll be ready to gear up more than ever in terms of moving the cargo.
All right, so Mary, we know this is one of your busiest times of the year at the ports as businesses gear up for back to school and the holiday season and so on and so forth. Give us a sense of kind of where you are at your port in terms of clearing the backlogs of ships coming into your port and then getting the cargo out to where it needs to be, even out of the warehouse. How do you feel like that supply chain is now in terms of getting back to some level of normalcy?
Well, we're certainly in a better scenario we were early this year. And simply using the metric of vessels that are trying to get into the port complex here at the Port of Long Beach and Los Angeles. As of right now, that number is 19. What was it back in January? Over 100. So just on that metric alone, I think you're starting to see some form of normalization. So the cargo is moving. We are seeing some increased numbers because ordinarily this is peak season. But nevertheless, we're nowhere in the situation that we were earlier this year.
Is that because China has slowed down its shippings, and so that makes that metric look better? Because people are trying to get a sense, as we come up on this new earnings season in a couple of weeks, companies are still going to be talking about supply chain problems. And I'm wondering, okay, maybe that metric of how many ships are waiting off seas, that got a lot of press. You guys are managing that, but the stuff still stays in the yard, in the port, or maybe doesn't get out to the warehouses, or when it gets to the warehouses, it's still stuck there. Is that still a challenge?
Yes, we're still having dwell issues. Clearly, going forward, there's going to be continued constraints and uncertainty, and all this COVID-based. I mean, when you mentioned China, the China zero COVID-19 policy is in part responsible for what we may now have a surge over and above the usual peak season surge, only because some of that cargo was delayed given the constraints that we saw in China because of the zero COVID policy.
All right, Mario, good stuff. Really appreciate getting an update for you. Again, the contract with the dock workers expiring this afternoon. Mr. Cordero suggesting that it will be resolved at some point sooner rather than later. Mario Cordero, Executive Director, Port of Long Beach, joins us on Zoom from Long Beach, California. And again, that supply chain issue, Matt and I, we go off on the supply chain issue because it's just fascinating, all the various parts, whether it's the ports, whether it's the trains or the trucks, you can't get drivers. It's just so complex, and it just ripples through. So it's just fascinating to stay on top of that. All right, let's get down to Washington, D.C., our 99.1 studios. Nancy Lyons for World and National News.
Thanks, Paul. President Biden has been meeting virtually with some governors today and going over the options for protecting women's access to abortion. He's facing increased pressure to respond more forcefully to the Supreme Court's ruling eliminating the constitutional right to the procedure. Well, today, New Jersey Governor Phil Murphy took action on abortion rights. He signed 2 laws to protect out-of-state patients seeking abortions in New Jersey and shielding reproductive health care providers from taking out-of-state inquiries.
The light of liberty shines a little brighter upon New Jersey. Moreover, these laws will make New Jersey a beacon of freedom for every American woman.
That's New Jersey Governor Phil Murphy. At least one Republican governor is stepping back from former President Trump after what he's heard during the January 6th hearings on Capitol Hill. Arkansas Governor Asa Hutchinson tells CBS Mornings he believes Trump acted irresponsibly.
Trump has disqualified himself, in my judgment, from his actions on January 6th and leading up to that. And so we have to go a different direction for our country, for my party.
Governor Hutchinson says he wishes there was a more balanced presentation with cross-examination of the witnesses. Simone Biles and the late Steve Jobs will be among more than a dozen new recipients of the Presidential Medal of Freedom. Biles is a decorated Olympic champion. Jobs co-founded Apple. They'll be honored in a White House ceremony next Thursday. The list also includes 2 former members of Congress, Gabby Giffords and John McCain. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. We appreciate it. Mike, I like to walk around with a little bit of cash in my pocket because you never know when you're going to walk past a craps game. So this story got my attention. Atlantic City casino workers reached pacts with MGM and Caesars, and that is key timing. It's 4th of July weekend. People flock down to Atlantic City for the beach, for the casinos and stuff like that, but it just kind of goes in with the last story we were talking about, the dock workers. A lot of people in labor, organized labor, it's been a period of strength for them.
I mean, it really is.
It's really, and we've seen a lot of strikes, near strikes, and the workers are getting, I think some pretty good deals.
Yeah, I think this return of the bargaining power of labor is going to be a big issue for the rest of the year, maybe even in the next year, But, Paul, I got to know where these craps games are. You and Miller, that's hanging out with Matt Miller.
That's right. That's right. Yeah, bad element. But it's interesting here. I mean, you think about it, Atlantic City's had a tough time, kind of with the evolution of gaming over the last, I don't know when it started there, 40 years ago,
right.
Something like that. But now it seems like you can, so many states have casinos.
Yeah.
And then this online betting, online betting has been a boon to Atlantic City because it just kind of makes it that much more fun.
Yeah. Well,
but
with competition too, though, with everyone with DraftKings and FanDuel right on their phone, though, it's always a challenge for Atlantic City. But you know what, Paul? They soldier on. It's a fun town. I enjoy Atlantic City when I get down there.
It's good. It's a lot of the casinos around here are getting better and better around the Metro New York area. So Atlantic City, if you're in this gaming business, you have to constantly reinvest in your properties. I mean, even out in Vegas. I mean, because every time you think the Bellagio is the end all beat all, then the Wynn comes up, and then all that stuff for the new thing across the street goes up. I mean, people are always raising the game here for these casino hotels.
Yeah, absolutely. But like you said, they dodged the bullet this weekend. I'm sure they're going to be happy to keep them open for the July 4th weekend. It's got to be one of their biggest weekends of the year, I would think.
Yeah, I would think so. Atlantic City casino workers reach pact with MGM and Caesars. That's a Wall Street Journal story. Found that very interesting. Markets higher. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. West Coast stock workers are extending talks past July 1st with no contract. That headline right now on the Bloomberg Professional Service. Moments ago, we were talking with Mario Cordero, the executive director of the Port of Long Beach. He was talking about the expiration of the West Coast stock workers contract. But again, the headline developing moments ago, West Coast stock workers extending talks past July 1st, just as he said, with no contract. Stocks are surging. At one point today in the early going, we had the Dow down 287 points, down 0.9%. What a reversal as we head toward the closing bell. 12 more minutes to go. We've got the Dow up 313 now, up by 1%. The S&P also up by 1%, with a rally underway, higher by 38 points. Best level of the day right now on the S&P. NASDAQ up 86. That is a gain of 0.8%. 10-year yield 2.88%. Spot gold, little change now, down 77 cents the ounce to 18.06. West Texas Intermediate crude oil up 2.5%, 108.40 for a barrel of WTI. So again, recapping the Dow, the S&P, NASDAQ, a rally underway. Best level of the day, major reversal for the U.S. stock market. S&P up 40 right now, up by 1.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much. It is 3:48 on Wall Street. You're listening to Bloomberg Business Week.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. For decades, U.S. companies have been making a significant omission in their financial statements, the full cost of their contributions to climate change. This matters not only for the planet's future, but also for investors today. It makes some businesses look more profitable than they really are, and it prevents others from realizing the value of new and greener opportunities. The Securities and Exchange Commission wants to address this by requiring better disclosure of climate-related costs and risks. Its proposal is an excellent idea, requiring only minor adjustments. No doubt, full financial recognition of climate change will be a challenge for corporate America, creating new winners and losers. But the sooner the process gets started, the less disruptive it will be. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, our drive to the close today. It's some story here. Boy, what a turnaround in the markets. Charlie was just talking to us about S&P up 1%, Dow up 1% after that early trade-off. So a little bit of strength into this close. Let's check in with our old friend, Sarah Ponzek, financial advisor for UBS Private Wealth Management. She joins us on the phone from Fort Lauderdale, Florida. Sarah, it's so great to chat with you again. How has the first 6 months been for you and your clients? What are the conversations been, as it just seems like the equity markets, the credit markets, everything is just going down every day. What's the conversation like?
Well, first of all, Paul, you said old friends. I would like to think we're still friends.
Of course.
And not so old either, Paul.
Exactly. Yeah, that's very true.
But I'm really glad to be here with both of you today. But there's no doubt about it. It has been a really, really tough start to the year. I mean, you look at stocks, you look at bonds, you look at almost any single asset class, and you look at the statistic, and it is the worst first half of the year since, decades. So it's been difficult. So when we think about the conversations that we're having with clients, people are on edge. There's no doubt about that. But you really have to just level set expectations. And that's really at the heart of it, because right now, it could be easy for an investor to look at the volatility in the markets and say, all right, that's it. I'm out. I'm pulling my money out of the market. I want to sit in cash. And there could be more downside. We actually believe that there could possibly be more downside. But at the same time, typically when the market's already down 20% in the first half of the year, that's not the time that you want to be liquidating your portfolio, because we all know that things happen very quickly in markets and things can change on a dime. And there was actually a statistic that I was reading out of Barron's this morning. And if you look at the different periods in which the S&P 500 was down at least 15% halfway through the year, which we hit that mark. The S&P is down about 20% as of now year to date. Every single time the index finished higher in the back half of the year, and the average return was nearly 24%. So that's not to say that volatility isn't going to persist. It likely will. There's no doubt about that. But still, you have to level set expectations and understand that it's part of the game of investing.
Sarah, I think the question on most listeners' minds is who's the best podcast co-host you've ever had?
I would have to say you, but I think I co-hosted with Valdana a couple of times.
Oh,
So
I knew she was going to spoil it somehow.
Valdana's name in the hat.
Yeah, for listeners who don't know, Sarah's a veteran of Bloomberg, and we used to co-host a podcast called What Goes Up. Do you like how I slipped that plug in there, Paul?
Yes, smooth. I did. I saw that.
You have to slip in a plug. Hey, although I'm no longer the co-host on the podcast, it's still a great podcast that I listen to it all the time. So thanks for the great insight, Mike.
We had the privilege, and Paul and I still have the privilege of just being able to ask the questions and not answer them. So we feel for you there. But Sarah, I'm wondering if clients are picking up on the internals of the market. The big story this year was we finally, after years of people predicting it was going to happen, we finally see that value factor outperforming the growth factor in the market. But at the same time, interest rates are coming back down. GDP outlook is a little bit weaker, so potentially we might get that bounce back in growth. Do clients get that into the weeds on their portfolios? And if they do ask about value and growth, what are you telling them these days?
I would say it typically depends on the client. There are some who very much pay attention to the internals. There are some who don't, and they just look at their television screen and see the Dow, the Nasdaq, and the S&P quoted. So it really depends person to person. Now, when it comes to the style shift between value and growth, obviously growth has had a very, very difficult time this year, and we have been leaning into value. So typically, when you look at data going back to 1975, value outperforms in periods when inflation is above 3%. Now, obviously, this year inflation has been well above 3%, as our clients definitely feel, just out in everyday life. And we do expect inflation to recede, but it's still going to take some time. So as a tactical play, so when you think of short-term plays, we do favor value. But that doesn't mean that you completely strip out growth from your portfolios. Growth stocks still make up a very important part of an investor's portfolio. And I would also add that, for investors who are younger or just investors who have money invested that they're not going to need to access, for the next 3, 5, 10 years, now could actually be a very good time to strategically start adding back to growth, because we have seen an extreme derating in valuations. And, we talk about quality growth names. I'm sure you can imagine some of the companies that I'm referring to that are still great companies and they're not going away anytime soon. They're still very competitive. But also when you think about more so structural growth themes. So when you think about, cybersecurity or robotics, artificial intelligence, these are structural themes that are not going away anytime soon. They're most likely going to be a very important part of the economy and our lives going forward. So especially considering that we've seen such a sturdy and deep growth sell-off this year, as long as you can, handle volatility in the near term, it could be a good time to start building up positions there.
Paul, Sarah, in the notes she sent over to us, had a great line here. I'm just going to read it out. Investors need to learn to be comfortable with being uncomfortable. That's also the lesson Sarah learned as my co-host.
Right, exactly.
Yeah.
But that's got to be a hard sell to clients, Sarah. Is that a hard sell to get comfortable with being uncomfortable?
It is, but typically, it's difficult for anyone to look at their statements and see the value of their accounts down. But once we go through, the data and what's typically happened historically, then it becomes easier for them to, feel more comfortable being a bit uncomfortable. Because as I said earlier, volatility is a fact of markets. You're going to see markets decline. And also, for investors who have been invested in the equity markets the past couple of years, you've enjoyed 3 straight years of high double-digit returns. That's not normal. So you're just seeing some of that froth come off now. And also, what is nice is, yes, we've seen valuations come down. Valuations are a horrible timing tool, but we now expect that future returns are going to be higher than we could have predicted at the start of the year.
Yeah, let's hope. Sarah Ponczak, financial advisor, UBS Private Wealth Management, on the phone from Fort Lauderdale, Florida. Coming up next, it's Beyond the Bell, our cross-platform coverage of the market close with our colleagues from Bloomberg Television. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
Just 2 minutes away from the end of the trading day. The trading week, Caroline Hyde, Katie Greifeld, Shonali Basak in for Romain and Taylor, counting you down to the closing bell and here to take us beyond that bell. Our global simulcast today, Paul Sweeney, Mike Regan in for Carol and Tim, bringing together Bloomberg TV, radio, YouTube audiences worldwide. As we pass what has been, well, actually a topsy-turvy kind of a trading day, thinner volumes, but actually a market that wanted to drive higher.
Yeah, it really has been. It's been, a big close into this close here as we head into the holiday weekend. I'm looking at the home builders. We see interest rates come down here as they have today. And one of the plays there are the home builders. I'm looking at, Lennar, KB Homes, Toll. They're all up about 4, 5, 6%. So a solid move for that interest rate sensitive sector.
Yeah, Paul, and on the downside, it's just all about chip stocks today. Pretty much the entire leaderboard on the downside is chip stocks after Micron came out with a gloomy outlook. So we've got Lam Research down more than 7%, KLA, ON Semiconductors, Applied Material, on and on and on, all down at least 4%. NVIDIA Corp down more than 4%, Katie. It's brutal out there for the chip stocks.
And I got to say, looking at today's action, I'm getting a little bit of deja vu because if you remember last Friday, the S&P 500 rallied by 3% only to fall every day until today, actually. So we're getting sort of another bounce on a Friday. I don't know, seems spooky.
Truly, and it's really hard to get excited about the bounce you're seeing even because, yes, it's up on the day. It's still lower on the week, but even with more than 3% of a drop, that's nothing like the more than 5% we've seen 2 out of the last 5 weeks, Katie.
Well, we managed to have the best day in a week for the market overall, up a percentage point on the S&P 500, 39 points, almost 40, let's call it, to the upside as we see these markets settle in to the closing bells. Fireworks, no less. There it is. It's Macy's. For those that can view, for our radio audience, it is Macy's that is celebrating over at the New York Stock Exchange, ringing that bell ahead of the all-important July 4th fireworks. We wish them a wonderful day there on the banks of the Hudson. And, of course, lots of celebration to be had if you're along these markets. NASDAQ up 0.9%, 11,127. The S&P up more than a percentage point, 40 points higher, let's call it. Dow Jones up 322 points, more than a percentage point higher. Let's flip it across to the small caps. And even though we got that manufacturing data coming in weaker than expected, even though we saw a flight to the bond market, we saw more than a percentage point move for the Russell 2000 as well. So, well, less than cautious tone as we head towards the long weekend.
Yeah, absolutely. A little bit thin volume here, as you would expect, heading into a holiday weekend. But again, seeing that nice reversal in tone in the market is something that I think a lot of the pros are going to pay attention to. Obviously, we have a lot of data coming up, and we have earnings coming up in a couple of weeks. So it's not just the Fed. We also have to look to corporate America, earnings and guidance. That'll be coming up starting in the next couple of weeks.
Yeah, let's take a look at some of the sectors here as well, because we did have some nice increases in some sectors. You're looking at utilities up 2.5% on the day. You're looking at consumer services up more than 2%, and retailing, real estate, like you guys were saying, had also caught quite a bid. We did have one sector that was down on the day, and of course, that's the semiconductors, down almost 3.5%. But beyond that, you're looking at a holiday in the green for the most part, guys.
Man, those chips never cooperate. But let's talk about bonds, because again, even though it was an early close, this was definitely a bond market day. And you can see just across the curve, whether it was the short end, the long end, or the belly, you definitely saw a bid for bonds. Interesting moves in the 10-year yield in particular, down 13 basis points. Your yield there, 2.88%. And I've been saying it all day. I'll say it again. We were at 3.5 just a few weeks ago. But man, there is a search for safety in markets right now.
And you saw that search for safety, Katie, in the bond market in Europe as well. Let's go cross-asset, global macro movers for our radio audience. I'm looking at, well, the bid into Swiss debt, 22 basis points lower. We saw Swedish debt. Over in New Zealand, you saw money moving into their bond market as well. 14 basis point move lower in their 10-year yield, price higher. Singapore, the UK getting bid to the point of 17 basis points on the 5-year gilt. All of this showing that there was a haven trade. Also some sort of feeling that perhaps with this weaker data, maybe some of these central banks can't be as hawkish as we had anticipated. That's certainly some of the feeling coming in with the ECB and European sovereign bonds. I'm looking therefore at, of course, the search for a haven playing out in the FX market as well. US dollar strength once again, and weakness for the Aussie dollar, weakening by 1.25%. We're seeing the Singaporean dollar weakening as well. Euro weaker to the tune of 0.5%. We also, of course, got that outrageous inflation data there out in Europe as well, 8.6% in terms of inflation, another record high. Commodities, well, I mean, overall, a mixed picture. Actually, all got a bid today after yesterday's sell-off, as we see once again the supply side concerns that coming into Libya today. So we see WTI crude up 2.4%, $108 is where we trade. But some of the metals, particularly think the likes of copper, steel down by 2.2% as we worry about recession risks.
And it's so interesting to wrap together those cross-asset moves. I mean, that big bid into the dollar, the big bid into bonds, you put that together, it feels really risk-off, and the S&P 500 today was the outlier. But as you can see, still down more than 2% this week. You have to wonder what next week is going to look like, especially that holiday shortened trading week that we're going to get.
Okay, I want to get back to what Paul said about this turnaround Friday for once here. You know, it is the first day of a new quarter, a new month. After such a brutal second quarter, S&P down 16%. So what happens next? Well, we had Jess Menton on talking about that earlier. According to LPL Financial, there's been only 7 quarters since 1950 where the S&P dropped more than 15%. What happens after that? Well, 100% of those times, the market was up in the following 2 quarters with an average gain of 17%. So a lot of worries about earnings, but history suggests, Caroline, that it is a good time to buy after such a nasty quarter.
You know, I'm flashing back to the beginning of this year when a lot of the Wall Street research from a lot of the strategists were saying, get ready for a bumpy year, a volatile year. And boy, have they been right. But I look at the VIX today, you know, it came in almost 2 full points. We're below 27 on the VIX here. So it's not panic volatility out there. You know, a lot of folks are saying if you see it at the mid-30s and hold there for a while, that might mean capitulation. But right here, we're below 27.
Maybe it's just quite expensive
yes.
to be getting that sort of protection as well. Tell you also what's expensive. Air flights. Airline tickets right now. You've got the airfares climbing, staff shortages as well, cancelled flights. I mean, volumes on the S&P down by 10% because, well, maybe everyone was getting on flights earlier this week. Overall, though, we've got a busy July 4th weekend upon us in the world of travel. That's why we want to go to New York City's LaGuardia Airport and bring those Kriti Gupta and kind of calm there, I expect, as everyone's quote-unquote working from home this Friday. Maybe they got on a plane on Thursday.
Yeah, Caroline, let me set the scene for you here. We're standing right outside in the departures kind of area of Terminal B, the newly renovated $8 billion project for LaGuardia that opened earlier this year. Outside of the security check-in, really where you see a lot of these check-in counters right now, American Airlines behind me. But I have to say, I wonder how much chaos is on the inside past the security lines because, Caroline, in just the last couple of hours, you've seen the flight delays increase, the cancellations increase. That was not the case about at 8 a.m. this morning when I walked through. Everything was on time, everything was orderly, but just like I said, in the last couple of hours, you have seen those flight delays increase to as much as 22 delays and 3 cancellations. So I wonder if the congestion is starting to build up on what's pretty guaranteed to be a pretty exciting but busy holiday weekend.
It's fascinating. Talk a little more about that. You had said that delays, cancellations piling up. Why?
Well, there's a variety of reasons here. I mean, you do, of course, have the sheer demand. A lot of airlines right now are talking about not having enough capacity. Some airlines even actually cutting their capacity. The other part of this is going to be labor shortages when it's coming to pilots, when it's coming to flight attendants as well. This is very important because in just the last 24 hours, we actually got a Supreme Court decision that said you now have to comply with California's rest and break rules. Essentially, the idea here being that if you have a cross-country travel, if you're an employee, essentially, of California, you have to be able to get a 30-minute break every 4 to 5 hours. Think about it. If you are flying from Miami to Seattle, from Boston to San Francisco, from coast to coast, That is at least 6-hour flight minimum. That means you have to have extra flight attendants, extra pilots to be able to do that. It's those kind of requests that airlines are struggling to grapple with at the same time that a lot of these pilot salary negotiations are happening. American Airlines, for example, increasing their salary to 17% for pilots going into 2024. Delta, Alaska, Southwest, those negotiations are still ongoing. So it's things like that that are kind of creating all of these snags in air travel at the moment.
Kriti Gupta, you've been in there all day. We thank you for it. Some great coverage from New York City's LaGuardia Airport. Now, here's a little bit of a Friday news dump for you. Toronto Dominion, TD, as we know it, said to be exploring a takeover of U.S. brokerage Cowen. Now we know that this is studying potential Cowen deal with advisors. It's an early stage, may not lead to a deal. This is all according to, of course, people familiar with the matter. $667 million market capitalization. I'm looking for Cowen at the moment. I know, Shonali, you often interview the CEO of this particular business, but really this was sort of a more independent kind of investment bank, right?
Yeah, absolutely. It's led by Jeffrey Solomon, and it is a very kind of classic Wall Street firm. It's a really big deal for TD, even though the price is a lot better than it was even earlier this year. The price had really fallen a lot in the public stock market. But what does it give TD? It gives TD a stronger hold in the U.S. prime brokerage business, institutional business, really, and also a little bit more exposure to underwriting. And you know what's funny too, guys? Just as a fun fact, Cowen also has warmed up to crypto. So we know that the Canadians.
That is a fun fact.
I know, right? And we know that the Canadians tend to list those firms with more rigor as of now.
And if we look at Cowen shares right now in the after hours, they jumped as much as 12%, now up 16% or so. So clearly, shareholders pretty thrilled about this potential, even though sources do say that the deliberations are early stage.
All right, good news, good stuff, good close for this market. And that does it for our cross-platform coverage of the market close on Bloomberg Television, radio, and YouTube. We'll be back Tuesday at the same time and place.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, let's head down to Washington, D.C. We're getting rolled in national news with Nancy Lyon.
Thanks, Paul. President Biden today convened a virtual brainstorming session with Democratic state governors to discuss ways they can protect abortion rights, which are no longer federally guaranteed.
The governor spoke of expanding facilities to accommodate out-of-state patients, including Kathy Hochul of New York.
Young women who never even had to think about this right are coming up and putting their arms around my neck and sobbing. So as long as I'm governor, these rights will not be rolled back.
Governor Roy Cooper.
It's up to the states whether women can get reproductive health care. And in North Carolina, they still can, and I'm determined to keep it that way.
If we don't keep the Senate, increase it in the House, the Republicans are going to pass a nationwide prohibition.
Some of the governors suggested using federal facilities to house abortion clinics. In Washington, Irv Chapman, Bloomberg Radio.
Airports are jammed and airlines are facing more delays and cancellations because of weather and staffing shortages. At Washington's Reagan National Airport, Calvin Kesterson and his wife took extra steps to prevent hassles on their trip back to New England.
I try to pack as light as possible, so that way I just keep my bag with me, don't have to worry about check-in baggage and it being in Hawaii while I'm in Maine.
Kesterson says driving would have taken way too long. A former tennis coach at Georgetown University has received the toughest sentence yet in the Varsity Blues bribery scandal. Gordon Ernst has been sentenced to 2.5 years in prison for pocketing more than $3 million in bribes in exchange for helping parents cheat the system. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Michael, here's a story that you just flagged that the headline, if nothing else, grabs you, by the shirt collar. J.P. Morgan sees, quote-unquote, stratospheric $380 oil. Now, this is on their worst-case Russian cut here. And I guess it's if U.S. and European penalties prompt Russia to inflict retaliatory crude output cuts. Wow.
Could you imagine $380 a barrel oil? I mean, gas at $5 now, would we be looking at what, $15, $20 a gallon gas? You would assume Paul, that the demand destruction on the way up to 380 would be so strong.
Yep.
But look, it's not like J.P. Morgan is a bunch of amateurs. I'm sure they've got a reason to be this worried about it. But boy, they're basically saying, given Moscow's robust financial position, they can afford to just slash daily crude production without really damaging their economy. And it's just this crazy year, Paul, where we've had the financialization of commodities and markets and the currency itself, like nothing I think any of us have ever seen in our career.
Yeah, and it kind of ties in a little bit with some news we've had over the last couple of weeks about the group of 7 nations to trying to hammer out a complicated mechanism to cap the price of Russian oil in a bid to tighten the screws on Russia. And I guess one of the responses could be a retaliatory response on the part of Russia here. But what I've been told by the experts is this price cap thing is really complicated.
Well, and I was going to say, anytime there's ever been an effort to cap the prices of anything anywhere in history, it doesn't really tend to turn out too well usually. So it's a tricky endeavor for sure.
Yeah, it's interesting, but we'll have to watch. I mean, looking at WTI crude oil up 2.5% today to $108. That's well off the 120 plus we had, but we were down closer to 100 just recently. So it continues to bounce around here. You got to remember, oil's a commodity, so you have to have a supply call and a demand call. And right now we've got increasing demand on what appears to be pretty fixed supply. We'll keep an eye on it. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Sources tell Bloomberg Toronto Dominion Bank, the Canadian bank that has been expanding through acquisitions, is weighing a deal for the brokerage firm Cowen. A rally on Wall Street today, light volume, but the Dow, the S&P, and NASDAQ all rocketed higher ahead of the 4th of July holiday, with the S&P up 40 points today, a gain of 1.1%. The Dow up 321, up 1%. NASDAQ rallied 99, up today by 0.9%. Treasuries surged after an ugly first half. The 10-year yield 2.88%. Spot gold little changed, up 40 cents the ounce to $18.07, up less than 0.1%. West Texas Intermediate crude oil up 2.5%, 108.36 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much for that business flash. We appreciate it. All right, what do supply chain crisis and quantum computing have in common?
We're going to find out, I think.
I have no idea. But fortunately, our next guest does, and I know what questions they ask. All right, Robert Lasowski, Chairman, CEO of Quantum Computing, joins us on a Zoom from Leesburg, Virginia. Robert, how can first of all, define for us quantum computing, and then number two, how can it help with our supply chain crisis, which is a global crisis?
Well, guys, thanks for the. I hope you're having a great afternoon, holiday weekend. Great topic. I think the easiest answer about what is quantum computing is that it's an exponentially much more powerful computationally way of looking at really complex problems. I can get into the physics of it, right? Classic computers look at ones and zeros. Quantum computers look at ones and zeros and a zero and a one at the same time. You can get into all that stuff, right? But I think at the end of the day, for the average business user, people need to know that we can do really, really complex types of computations, dealing with supply chain, dealing with all sorts of variables in ways that classical computers can't even begin to achieve.
Yeah, so Robert, your company is Quantum Computing Inc. QUBT is the ticker symbol. Why don't you tell us a little bit about some of the products you're offering or have in development? I know a lot has to do with stuff like security support and that sort of thing. Could you walk us through some of your main offerings and what we should need to know about them?
Sure. So we started off as a software company. We're a platform that was designed to allow business users or any user for that matter to connect up to a quantum computer. Quantum computers don't have the same programming language that classical computers do, right? You can't take what you've done on a Windows machine or an IBM 360 or whatever the machines are out there and then be able to do that on a quantum computer. They need different programming techniques, right? They're very complex systems. You need quantum programmers to be able to do these things. So we created a platform that would allow a business user to formulate a problem that could run on not just one quantum computer, but any number of quantum computers, Rigetti, D-Wave, IonQ, et cetera. And that way we took the heavy lifting out of the equation and allowed people to be able to do things today. The challenge is quantum computing as a domain, as a computer itself, hasn't quite achieved the level of capability that we needed to yet, right? It's a process. It's an evolutionary process that says, hey, we can do great things today, but we're going to really do great things, better things tomorrow, because quantum computers are going to be much more capable in a few years than they are today. Classical computers can do things that quantum computers can do right now, and in computational problems that they can really give good results for. But over time, quantum computers are going to continue to evolve into really, really capable machines. So we looked at a way that we could bring business users to those machines, get them ready to be quantum ready as machines are coming online, solve certain problems dealing with supply chain and other optimization problems. However, just recently, and this is really exciting for us, we just acquired a company, a photonic computing company called QPhoton, which actually uses photonics, a different way to look at a way of computing quantumly. And we can actually solve some problems today that are actually business problems, business-related problems. So there's a way to apply quantum computing and techniques today that quantum computing can actually solve. And we have a computer that can do that. So what's really interesting is that we have become a full stack quantum computing company. We're no longer just a software company. QPhoton is no longer just a hardware company. Together, combining these two companies, we can do an end-to-end approach toward providing solutions to real-world problems.
Yeah, Robert, I was going to ask you about that whole notion of the full stack. You know, so much of what we've talked about this year has been the semiconductor market. You know, who's able to source the chips they need, who's not, where the shortages are. I'm guessing in your line of work, you need access to the best, fastest chips available. Is this whole supply chain issues with the chips themselves thrown you any curveballs? Is it a problem at all?
No, it hasn't been. I mean, first off, we're not producing computers at scale yet. We're just producing a couple and 3 of them at a time. So for us, supply chain issues haven't really manifested themselves in terms of the scale that, most supply chains are seeing that. Secondly, the chips that we're manufacturing, and we are manufacturing chips, are much different than what you see in the microchip industry. So ours are very specialized, very unique types of materials that go into creating the photonics that are required for our quantum computing. So we haven't bumped into that. Now in the future, perhaps, but I think we've got, our plans and scaling help us kind of mitigate that kind of risk. But to your point, a lot of the computer industry is suffering from those microcircuits and microchips types of supply chain issues, and they will be for the foreseeable future. We, on the other hand, we're not going to be bumping into that. And you really can't compare the two. The quantum computer is going to be able to do things that many classical computers couldn't do tied together. One quantum computer is going to be able to achieve computational superiority that those classical computers can't do. So supply chain issues won't be as impactful to the quantum industry as they are in the classical industry.
All right, Robert, thank you so much for joining us. Really appreciate getting your thoughts there on a fascinating kind of new technology, certainly to the Luddites like me. But Robert Laskowski, Chairman and CEO of Quantum Computing. It is a publicly traded company. The ticker you can put into your Bloomberg terminal, QUBT. He joined us from Leesburg, Virginia via Zoom. So quantum computing, you hear about it and it's just, magnitudes above kind of where existing computing is. That's my takeaway.
Right.
And you just got it's a question of applications, I guess. And I would think the applications would just be endless, but these people are smart.
Yeah. It's still early stages for this company, so it'll be interesting to see what they, where they find that market.
Absolutely. All right, we're going to wrap up soon here at this market. We're 4:25 Wall Street time, and we had a good close to this market, up 1% on the S&P 500.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. Paul Sweeney, Michael Regan sitting in for Carol and Tim. Coming up, we're going to check in with Martin McGuinn, former Mellon Bank CEO. He's got an autobiography out. And get this title, I love it. From Swampoodle to Mellon Bank CEO, an Irish American's journey. So you got a Sweeney here and a Reagan here. We're going to be all into this story. But first, let's go to Charlie Pellet, get a Bloomberg Business Flash.
And finally,
thank you very much. And here's what's going on. The Dow, the S&P, NASDAQ, big gains today for the U.S. stock market. But first, sources tell Bloomberg, Toronto Dominion Bank, the Canadian bank that's been expanding through acquisitions, is weighing a deal for the brokerage firm Cowen Inc. Again, today we had Treasuries surging after an ugly first half as weak economic data added to recession fears. A late day rebound in stocks was exacerbated by low volume ahead of Monday's holiday. Today, the S&P up 40 points, higher by 1.1%. The Dow up 321, up 1.1%. NASDAQ up 99, higher by 0.9%. 10-year yield 2.88%. Spot gold little changed, 18.07 the ounce. West Texas Intermediate crude up 2.6%, 108.47 a barrel. So an update for the Dow, the S&P, and NASDAQ. Sarah Ponzik is financial advisor at UBS Private Wealth Management, and she was our guest right here on Bloomberg Business Week.
There's no doubt about it. It has been a really, really tough start to the year. I mean, you look at stocks, you look at bonds, you look at almost any single asset class, and you look at the statistic, and it is the worst first half of the year since, decades. So it's been difficult.
Kohl's Corp's board has taken the retailer off the market after failing to agree on a potential $8 billion sale to Franchise Group, sending the department store operator's stock to its biggest drop in 2 years. Kohl's Corp shares dropped today by 19.6%. J.P. Morgan Chase analysts are warning global oil prices could reach a stratospheric $380 a barrel if U.S. and European penalties prompt Russia to inflict retaliatory crude output cuts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We appreciate it. I'm going to get right to our next guest, Martin McGuinn Jr. He's a former Mellon Bank CEO, and he's got his autobiography out, and it's just fascinating for a good Irish American like myself. It's titled From Swampoodle to Mellon Bank CEO, an Irish American's Journey. Marty joins us on the phone from the Hamptons. Marty, I love the title, but you got to tell me, what or where is Swampoodle?
Well, it certainly is an unusual word, and it's a neighborhood in northern Philadelphia where a lot of Irish immigrants settled in the early 1900s, including my grandparents. So it seemed like a good place to start telling my story, and so it is from Swampoodle to Mellon Bank CEO.
I thought it was like a golden doodle there for a minute, Paul.
Yes, exactly.
But Marty, I started reading your book and I started getting chills because let me tell you my own life story. I had great grandparents from Donegal and County Mayo. Came to America, worked in the coal mines near Wilkes-Barre. Then we ended up in Westchester, PA, right down the street from where you ended up. So I feel like you and I might need a DNA test or something to sort this all out. But I got to ask you, I know as a Villanova booster yourself, I think my Philly friends would kill me if I didn't ask you, can you get Jay Wright to come back to the team, do you think?
Oh, well, that's a very important question. And I wish the answer is that we could. But I think Jay had a wonderful run, and he really was ready to move on. But he's created a program and a culture and a tradition, though, that I think will be carried on. And it's not just a basketball program that wins games, but really develops players and is consistent with the community spirit that thrives at Villanova.
Hey, Marty, I'm just kind of seeing here, you grew up in Princeton, graduated from Villanova and Villanova Law School, and then you served in the Marine Corps in Vietnam. Tell us about that experience.
Well, I joined the Marine Corps while I was in college because they had a a program where you went down during summers in college and went through your basic training, and then you were commissioned when you graduated. And in my case, I was guaranteed a deferment so I could go to law school and then serve on active duty. And that seemed a good way for me to commit to serve my country, but at the same time be able to start my career in a way that was consistent with my planning. And in the Marine Corps, as you may know, I mean, they have a saying, every man's a fighting man from the commandant on down. So you have to get through all the same basic training, even if you intend to have or hope to have a basic legal responsibility, which is what I did. And then serving in Vietnam was what all Marines were doing during those days when I was active.
You know, Marty, I always like to talk to people who have had experiences running a bank because I feel like they have such a unique perspective on the economy and markets, almost like no one else can sort of view from having been in your position. And I'm curious, you know, if we're here sitting in an environment with more than 8% inflation, treasury yields going up one day, down the next year, stocks in a bear market, what's your sort of read on the economy and how we should think about markets and the whole banking industry and everything in your old wheelhouse these days?
Well, that's a pretty broad question, but let me try to answer it. As far as the economy is concerned, I mean, I think we've had a fairly strong economy for quite a few years now. And then when Congress really stepped up the spending, I think that really is what triggered the first move toward inflation. And then when you have, of course, the war in Ukraine and the energy problems and all the other issues, and then, frankly, I think the Fed was very slow in moving to raise interest rates. And so the challenge now looking ahead, in my opinion, is the Fed would love somehow to get us what they call a soft landing, which means they can tame inflation without causing too much disruption in the economy. But that's been very hard to do, both historically and I think in this environment with so many problematic issues that I think it's going to be difficult to do. So my own opinion is I think there's a greater chance for a recession than previously. So maybe it's more likely than less likely. I think going back to the banking part of your question, government regulation has been increasing in the last decade or so. And making it very difficult to compete in an economy where you're not only dealing with non-financial institutions that are regulated differently, but you're dealing with competitors on a global basis. So it's a very difficult environment, and of course, you're right. I mean, the banks have to work very hard in the economy, as all companies do, but still, they're more directly affected. So this is a very difficult environment, I think, for banking.
All right, Marty, you're going to stick with us. We're going to come back and chat with you a little bit more. Marty McGuinn Jr., he's a former Mellon Bank CEO, author of From Swamp Little to Mellon Bank, CEO, An Irish American's Journey, joining us on the phone from the Hamptons. And Marty is coming back. But first, let's go get our latest on world and national news with Nancy Lyons in Washington, D.C.
Thanks, Paul. Russian missile attacks in residential areas killed at least 19 people in a Ukrainian town near Odessa today. The Ukrainian president's office says 3 missiles fired by Russian bombers hit an apartment building and 2 campsites. Some fear that Russia is getting the upper hand. But retired Brigadier General Mark Kimmett tells Bloomberg the U.S. and its allies will not let that happen.
I think if this starts getting out of hand, NATO will step in terms of material support, get more equipment, more ammunition, more capability to the Ukrainians to stop that forward movement inside the Donbass and outside the Donbass, for that matter, as well, as we saw with Odessa today.
Retired Brigadier General Mark Kimmett. Ukraine's President Volodymyr Zelensky says a terrorist country is killing his people. American Brittany Griner appeared in a Moscow courtroom today. The WNBA star has been detained in Russia since mid-February after Russian authorities said they found cannabis in her possession. U.S. Embassy spokesperson Elizabeth Rood spoke with reporters following today's proceedings.
The American government cares very deeply about this case and about Ms. Griner's welfare, as do millions of Americans, as well as we care about the welfare of all U.S. citizens in prison overseas.
Elizabeth Rood says she met with Griner in the courtroom and says she's in good spirits and keeping the faith. Her trial will resume next Thursday. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. We appreciate it. All right, Michael, if you like stories with big numbers, I got one for you. Richest billionaires lose $1.4 trillion in worst half year ever. So that prompted me to go to my favorite function on the Bloomberg terminal, Rich Go. Yeah. And it's just the great and by far the best analysis in the marketplace of personal wealth for people, individuals. Elon Musk, wealthiest person in the world. He lost $61.8 billion year to date. Jeff Bezos, number 2 at $129 billion. He lost a huge percentage, $62.7 billion. These are numbers that get your attention.
Really, and I'm amazed at the guy at the top of the list, Changpeng Zhao. He is the chief executive officer of Binance, the world's largest cryptocurrency exchange. So, of course, it's got to be a crypto guy who's on the top of this list this year.
Exactly, but it's just, I mean, you think about it, and it puts it into context. Obviously, the numbers are big, and they're famous people, and we get to talk about that. But when you think about the first half of the year, that 60-40 portfolio, i.e., all right, if 60% of my portfolio, which is in equities, that goes down for a variety of reasons, I'm going to be buffered a little bit by my 40% in fixed income. But then you go look at the INGO function, which has all the indices and their performances year to date. You look at the Bloomberg Corporate Bond Total Return Index, down 14-15%. Treasuries down 4. Treasuries, the safest security out there. Total return, there was no place to hide.
Yeah, and you know, go back, rewind a couple years, and people were talking about the bubble and everything. You know, bubble in fixed income, bubble in crypto, bubble in stocks, and I think you know, a lot of people are like, yeah, whatever. You know, doom and gloom type of people. But this is what you get on the other side of it, for sure.
Yeah, you do. I mean, I guess the only place is just kind of commodities in general. So I always think of Lisa Bromwitz, who's got a couple of barrels of crude oil in her apartment on the Upper West Side. She had a good year, but again, it just kind of highlights the breadth of the carnage we're seeing here, and it wasn't just mom and pop; it was the big folks too. Again, $60 billion of lost wealth in the first half of the year. So those numbers just kind of jump out at you. We're gonna have more coming up. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Bonds catch a bid while stocks saw a late-day rally. In fact, rockets on Wall Street, fireworks ahead of the 4th of July. S&P rebounding by 40 points today, up by 1.1%. Got to keep in mind that at the worst level of the day in the early going, the S&P was down 33 points, down by just about 1%. The Dow today finished with an advance of 321 points, up 1.1%. Again, at the worst level of the day, we had the Dow down by just about 0.9. NASDAQ higher today by 99 points into a long holiday weekend. NASDAQ up by 0.9%. 10-year yield 2.88%. Spot gold 18.07 the ounce, up less than 0.1%. Crude up 2.6%, 108.48 a barrel on WTI. Sources tell Bloomberg Toronto Dominion Bank, the Canadian bank that's been expanding through acquisitions, is weighing a deal for the brokerage firm Cowen. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thanks so much. We appreciate it. Let's get right back to Marty McGuinn. Marty is a former Mellon Bank CEO, and he is the author of his autobiography entitled From Swamp Poodle to Mellon Bank CEO, an Irish American's Journey. He joins us on the phone from the Hamptons. Marty, thanks so much for hanging on there. Love to get some color from you. You were chairman and CEO of Mellon Financial Corporation from 1999 to 2006. Talk to us about that time and some of the challenges you faced.
Well, that period of time followed a very strong stock market, which was not only important for how corporation shares trade, but of course we sold our retail banking business, so wanted to move away from being a more traditional bank to a more focused organization with our strategic focus on asset management and asset servicing. So that slower market period after a stronger market period also had a major impact on our business. So it was a major struggle with one of the poorest equity markets since the Depression.
You know, Marty, I read a few pages from the book earlier, and really one anecdote that caught my attention was when you were a kid, going to see the Philadelphia Athletics play at Connie Mack Stadium.
Whoa, it's going back.
That's going back, Paul. But here's, and as I said before, Marty and I have such a similar background. I wondered if we were related. But here's what really made me think we're related, Paul, is he used to wait till about halfway through the game, so he could get in for free and not have to pay for
Nice. Okay.
But Marty, I'm wondering, with that kind of humble and hardworking upbringing that you describe in the book from your family in the Swamp Poodle section of Philadelphia, how does that serve you eventually in the role of a bank CEO? I'm guessing, you earned or you learned the value of a dollar very early, and I'm guessing you must have carried that on throughout your career as a banker. Is that fair to say?
No, I think it's very fair to say, and I would expand on that slightly. Yes, my grandparents were Irish immigrants. My grandfather was an operator of a trolley. My grandmother was a homemaker. And so we began with very modest backgrounds. And so I think that certainly teaches you that not only the value of a dollar, but I think also the need to work hard and to be committed to what you do. And frankly, I also think but my Irish American background was very important too in inculcating a desire to work hard, but also to maintain a sense of humor, especially about myself. And I think those combined backgrounds have been very important in my life.
That's true. The Irish are very self-deprecating. Paul knows that too. It's rare to get three Irish guys from Philly together like this without someone getting in trouble. I don't know.
Well, remember, Connie Mack Stadium was right on the edge of Swamp Poodle, too, so it was right there.
Oh, that's fun.
I wonder where the term Swamp Poodle, what's the origins of that?
It's a good question, and I've tried to find the answer, and it's not a very satisfactory answer, so I'm afraid I can't give you a very good answer. But somehow it's stuck, and I think many people don't know about it today, which is why it sort of made the title kind of intriguing.
Yeah, it's interesting. So, Marty, if you think about the U.S. banking system over the last 15 years, wow. We had the great financial crisis, 2007, 2008, and the banks obviously played a role there. We've just gone through 2.5 years and still dealing with this global pandemic, and that's been an uncertain time. How do you, just give us your thoughts on kind of, as you look at the U.S. banking system here today, kind of what are your views in terms of how it's performing, the relative health of it, and kind of maybe what it can do better?
Well, I think these last 15 years and a lot of the extra regulations have made doing business more burdensome than it needs to be. But on the other hand, some of those regulations and the requirements that banks have to comply with in terms of capital have also made the banks much stronger. And so I think today the banks in general are very strong. And I think these tests that have been applied periodically have shown that to be the case. Obviously, the economy now is a major challenge, but I think the banks are well positioned, and I hope we can get a balance in the regulatory environment that dissuades inappropriate risk, but also encourages appropriate risk taking and keeps our banking system strong because it's so important to the economy.
Marty, Paul and I were just talking about how it seems like there was almost a bubble in just about every asset class the last few years that's collapsing before our eyes now, from stocks to even treasuries were probably overvalued there. The one bubble that perhaps exists that hasn't burst just yet is housing. We've had this tremendous run up in housing prices, and obviously that caused a big problem when they came back to earth during the financial crisis. To get back to that idea of regulation, I mean, is the current banking system, knock on wood, in much better shape to absorb some roughness in the housing market if these prices come back to earth?
Yeah, I think for sure. Part of the problem with the prior crisis was that the bank lending, and not just banks, by the way, but even non-banks, a lot of different financial institutions which were less regulated, were obviously lending sometimes without requiring any collateral at all. And so, look at Lehman Brothers, they were so highly undercapitalized and over-leveraged that's what ultimately led to their demise. And I think today banks are stronger. I think the requirements against lending, especially on houses, will protect the banks and hopefully homeowners as well during this crisis. But remember, too, part of this bubble, if that's what it is, or at least the massive appreciation, is being driven by supply and demand. And there's just far more demand than there is supply, and that's being reflected in many markets. On the other hand, as interest rates go up, that will have an impact on people that have borrowed, but hopefully both they and the banks are in better position to absorb that.
Not bad for a guy from Swamp Poodle, Paul.
No, that's not bad at all. Hey, Marty, thank you so much for joining us. Really appreciate you taking the time on this Friday afternoon right before the long weekend. Marty McGuinn, former Mellon CEO and author of his autobiography entitled From Swamp Poodle to Mellon Bank CEO, an Irish American's Journey, joining us on the phone from the Hamptons. So good story there to end the week here. And what a day in the trading here, Michael. And I started the day early with Tom Keene. It was not looking good there, and it was kind of a rough morning of trading. And then here, finishing it out with you, and things really turned around in the afternoon session here. And we went from, kind of a negative 1% in the S&P today to an intraday now up 1% on the close.
Yeah, what's that old saying? If you don't like the weather in San Francisco, stick around, it'll change.
Right,
so
exactly.
I think that's the kind of market we've had this year, just these swings up and down. I saw a stat yesterday, another Jess Menton stat from one of her columns.
Yep.
More than half of the trading sessions this year, like 51%, have seen a move of 1% or more.
Yeah.
That's off the charts.
Yep, and that kind of, again, we started the year, we were being warned, this is going to be a volatile year as the economy reopened, and boy, that has been the case. So anyway, we're going to close out the week. Hopefully, Carol Miller and Tim Stenovic will be back for you next week for starting on Tuesday. Everybody have a great weekend. This is Bloomberg.